Have you ever wondered what a Bitcoin ETF is and why it could be a game changer for the cryptocurrency world? Let's delve into the intricacies of a Bitcoin ETF. Standing for Exchange Traded Fund, an ETF is a type of investment fund and exchange-traded product, traded on stock exchanges much like individual stocks. A Bitcoin ETF, then, is one that tracks the value of Bitcoin, allowing investors to buy into the ETF without going through the process of trading Bitcoin itself. Now, why is this considered a significant milestone for Bitcoin? Well, it's quite simple. The approval of a spot Bitcoin ETF would provide legitimacy and signal the maturity of the asset. It would allow institutions and everyday investors to easily gain exposure to crypto, potentially opening up Bitcoin to a new set of buyers and sellers. This is where major financial players come in. Institutions like Fidelity, VanEck, and BlackRock have shown interest in launching Bitcoin ETFs. Their involvement is a clear indication of the growing institutional demand for such a product. This is not just about making Bitcoin more accessible. The launch of a Bitcoin ETF could lead to the creation of financial products and model portfolios that include Bitcoin, potentially exposing millions of people to the cryptocurrency. However, it's not all rosy. There are still open questions regarding a Bitcoin ETF, such as market dominance by a particular firm, and the impact on Bitcoin's development and governance. Plus, market surveillance is an SEC requirement for ETFs, which could raise concerns about privacy and censorship. Clearly, a Bitcoin ETF could be a major step in bringing Bitcoin into the mainstream financial world. Despite the uncertainties, the crypto industry is hopeful that the approval of a Bitcoin ETF could lead to more favorable regulatory decisions, paving the way for wider adoption of Bitcoin and other cryptocurrencies. So how could a Bitcoin ETF change the game for investors and the cryptocurrency market? Let's delve into this. A Bitcoin ETF, or exchange-traded fund, would essentially act as a bridge, linking the traditional financial market with the somewhat elusive world of cryptocurrencies. This connection could welcome a new set of buyers and sellers, broadening the scope of the Bitcoin market significantly. Imagine the possibilities if financial institutions, traditionally seen as the guardians of the old financial order, could easily gain exposure to Bitcoin. We're talking about big names here like Fidelity, VanEck, and BlackRock, who have shown interest in launching Bitcoin ETFs. Their entrance into the crypto market could signal a pivotal moment of maturity for Bitcoin, and potentially boost its legitimacy. But it's not only about the big players. Everyday investors could also benefit. The launch of a Bitcoin ETF could simplify the process of investing in Bitcoin, removing the technical barriers that may have previously deterred potential investors. This ease of access could open the doors to a whole new demographic of Bitcoin investors. Now, let's take it a step further. The advent of Bitcoin ETFs could lead to the creation of innovative financial products and model portfolios that include Bitcoin. What does this mean? Well, this could potentially expose millions of people to Bitcoin, expanding its reach beyond the confines of the crypto community. Let's pause for a moment and consider the magnitude of this. We're talking about the potential for a surge in demand for Bitcoin, driven by increased accessibility and exposure. This could catapult Bitcoin into unprecedented territory, challenging the status quo of the financial world. A Bitcoin ETF could significantly broaden the base of potential Bitcoin investors, potentially leading to a surge in demand. And with that, the landscape of investment could be forever changed. But what are some of the open questions surrounding a Bitcoin ETF? Well, let's dive right into the heart of the matter. One significant concern is the potential for market dominance by a particular firm. With the approval of a Bitcoin ETF, there could be a rush of large financial institutions such as Fidelity, VanEck, and BlackRock vying for control. This could lead to a concentration of power within the Bitcoin market, with one or two major players holding sway. How would this impact the decentralized nature of the cryptocurrency, which was designed to be a democratic, peer-to-peer system? It's a question worth pondering. Then we have the question of Bitcoin's development and governance. How would the approval of a Bitcoin ETF affect the future direction of this digital currency? Would it still be driven by the needs and wants of its community of users, or would it become more aligned with the interests of institutional investors? Would the ethos of the Bitcoin community be maintained, or could it be compromised? Another aspect to consider is the privacy and censorship concerns related to the SEC's requirements for market surveillance. The SEC mandates market surveillance for ETFs to prevent fraudulent and manipulative practices. But could this lead to concerns about privacy and censorship within the Bitcoin community? After all, One of the appeals of Bitcoin is its ability to provide financial transactions without the need for a central authority. Lastly, we can't ignore the potential impact on the volatility of Bitcoin's price. With more institutional investors entering the fray, could we see even more dramatic fluctuations in the value of Bitcoin? Or would the influx of new investors help to stabilize the market? These are just a few of the open questions surrounding a Bitcoin ETF. It's clear that while the approval of a Bitcoin ETF could represent a significant leap forward for the cryptocurrency, it's not without its potential pitfalls. While a Bitcoin ETF could be a major milestone, it's not without its potential pitfalls. And what could the approval of a Bitcoin ETF mean for future regulatory decisions? Well, a Bitcoin ETF could have significant implications for the regulatory landscape of cryptocurrencies. For starters, the approval of a Bitcoin ETF could potentially sway future regulatory decisions in favor of the crypto industry. The acceptance of such an ETF would be a clear sign that crypto is being embraced by mainstream finance. This could set a precedent, making it easier for other cryptocurrencies to gain approval for their own ETFs. It's also worth noting the role of the Securities and Exchange Commission, or SEC, in these decisions. The SEC has a mandate to protect investors, maintain fair markets, and facilitate capital formation. With the approval of a Bitcoin ETF, the SEC would be signaling its confidence in the ability of crypto markets to meet these criteria. The chair of the SEC, Gary Gensler, is a significant figure in this scenario. Gensler has a deep understanding of both finance and technology, having taught courses on blockchain and cryptocurrencies at MIT. His knowledge and leadership could be instrumental in shaping the regulatory environment for Bitcoin and other cryptocurrencies. However, it's not all smooth sailing. The approval of a Bitcoin ETF could also raise some regulatory concerns. One of these is market surveillance. This is a requirement for ETFs, and it could raise questions about privacy and censorship in the crypto world. Then there's the issue of market dominance. If a particular firm gains too much control over the Bitcoin ETF market, it could negatively impact Bitcoin's development and governance. But despite these challenges, the crypto industry is hopeful. The approval of a Bitcoin ETF could be a major step toward more favorable regulatory decisions. It could open up the crypto world to a new set of investors, making Bitcoin and other cryptocurrencies more accessible to the wider public. The approval of a Bitcoin ETF could set a precedent that influences the future regulatory landscape for cryptocurrencies. So, where does all this leave us in terms of the potential impact of a Bitcoin ETF? Well, let's take a step back and look at the big picture. Bitcoin ETFs, or exchange-traded funds, represent a significant milestone for the cryptocurrency. By providing a regulated and easily accessible way for both institutions and everyday investors to gain exposure to Bitcoin, they could potentially open up the world's first cryptocurrency to a whole new set of buyers and sellers. But it's not just about accessibility. The approval of a Bitcoin ETF would also signal the maturity of the asset, providing a level of legitimacy that could lead to the creation of financial products and model portfolios that include Bitcoin. Imagine the potential of exposing millions of people to the world of cryptocurrency. However, it's not all smooth sailing. There are still many open questions surrounding Bitcoin ETFs. How will they impact Bitcoin's development and governance? What about market dominance by a particular firm? And let's not forget the elephant in the room: privacy and censorship. Remember, market surveillance is a requirement for ETFs, which could raise some serious concerns. And then we come to the potential regulatory implications. The crypto industry is hopeful that the approval of a Bitcoin ETF could pave the way for more favorable regulatory decisions. But as with any new development, it's a delicate balancing act. We need to ensure that the potential benefits of a Bitcoin ETF don't come at the expense of increased risk or instability. So, what's the bottom line? Well, as with anything in the world of crypto, it's a complex and rapidly evolving landscape. Whether a Bitcoin ETF will be a game changer or a source of new challenges remains to be seen. But one thing is clear: it's a development that could have far-reaching implications for the world of cryptocurrency.